Hey folks, Joe Valley here. Thanks for joining me for another episode of the Quiet Life Podcast. Today, I've got a guest on that was on about a year and a half ago. His name's Sean Clercq. He's from a company called Kickfurther. If you are an investor and you want to invest in a multiple varieties of e-commerce businesses, take a look at Kickfurther as a funder. If you are a brand owner and need inventory and you want to get access to funding for more inventory without taking on debt or giving up equity, you've got to look at Kickfurther. Sean's success story is really, really impressive. We talk about that in terms of the arc of the company and what they're doing, where they are now, how they did in 2022. They were up 80% in 2022 over previous years, and they're not a young company, relatively speaking. I think he launched it in 2017. I think when he said he was a young guy. He's 36 years old now. Really, really impressive. Got some really, really impressive backers as well. Definitely take a listen, both in terms of learning what it's like to run a company that is growing at this pace, and also as an option for you as an investor or as an option for you to gain funding for your inventory without taking on debt or giving up some of your equity. Here we go. Sean, welcome back to the Quiet Life Podcast. How are you?
Very good, Joe. Glad to be back.
It's been a while, and you had a busy year in 2022, didn't you?
Yeah, banner year for Kickfurther. More growth in 2022 than ever before.
Total percentage, top in 50%?
So what's really exciting for me, like sitting from the seat of the CEO, is what we grew our GMV and our revenue by 80%. But at the same time, we grew our gross profit by 187%. So my life has gotten a lot better and less stressful in the last 12 months.
That doesn't happen often. Congratulations. That's fantastic. So Kickfurther's got a bit of a different model than most other inventory growth capital lenders type of thing. Can you summarize it for the folks that don't know about you yet?
Yeah, absolutely. So, we touched on this last time, but what makes us at Kickfurther very unique is we're not a lender. So we don't issue loans. We don't do anything like that. We actually operate as an inventory asset marketplace. So businesses, specifically product businesses that we're working with today, right? You need stuff to sell, right? Physical goods. And it's in most cases, you have to pay a factory to make the stuff before they're going to give it to you and you can start selling it. If you haven't been able to negotiate terms or something like that. And so what we've designed is a pretty, I think a pretty nifty solution where, you're connected to an entire marketplace of people who are willing to buy that stuff from the factory. And then we leverage a consignment contract. So that inventory, those assets are placed on consignment with a product business. As they sell through the inventory, it triggers that underlying consignment, and then they pay the people that funded it and actually own the inventory back a portion of the proceeds.
So even though your investors own the inventory, your client, the brand owner, would have possession of it at their 3PL or at Amazon or wherever they store their inventory, right?
Yeah, exactly. So it's produced and placed on consignment with them.
So this is interesting from sort of two angles, right? So the audience is full of buyers and sellers and investors as well. You've got obviously the brand owners, the buyers that would use your services that grow their business as well, the current owners, but investors too. Am I right there? Because the people that are buying this inventory, providing the funding for the inventory, are earning a return on their investment through Kickfurther. Yes?
Yeah.
Can you detail that?
Yeah, absolutely. So essentially they're buying the inventory. They take it on their balance sheet, the people that are, the funders, we call them inventory funders or buyers. And what they earn in exchange is a consignment profit. So essentially the inventory is placed on consignment with a business. The business doesn't have to pay for it on day one, right? So it's a very cash flow friendly solution for product entrepreneurs. So $0 cash out of pocket for the product business. They get the stuff. When they sell it, it triggers that underlying consignment contract. Kickfurther monitors the inventory, and then we invoice as the inventory sold, ACH debit, and then distribute the inventory proceeds, the sales pro rata to the funders. And you can imagine it's like typically about 1.5% consignment profit per month is offered to the funders in exchange for buying that inventory and placing it on consignment. So if you think like takes about 4 months to sell through inventory, you buy $100 of inventory, you might expect to earn $106 in total when the inventory sells through.
What's the success rate for the funders? How much of them are losing money?
That's a good question. So what I can tell you is our platform dollar adjusted, loss adjusted IRR, actually I should call it annualized consignment profit, is 15%. So that's including the deals, the inventory that gets lost, that gets pulled back, put through a liquidation channel, and cash returned to the funders. And there are some cases, and this is something I'm working to solve right now, where if you come onto the platform, there's like a overall a 6.5% cancellation rate, but we get a lot of that money paid back even when a co-op is canceled. There's some situations right now, if you only want to put like $5,000 to work against inventory, you can only get into like 2 or 3 or 4 co-ops, and that's like not good, right? We really want people to be able to get access to 30 or 50 consignments at the same time. So that's something I'm actively working to solve for our customers.
So as the funders, you want to spread your risk, essentially, not have it in 1 or 2 brands, but in 30 brands.
So that's another way of asking the question. So the funders that have the best returns, the best earn the most profit, have made outsized bets on certain co-ops. So they find someone, they're like, this business is a winner. I like working with I recertify, for instance, right? And when they come up, they have 1, 2, 3 good experiences, and then they start doubling, tripling, quadrupling their participations in the groups that they find to be winners. And for us, if a business is ever canceled and they no longer, they essentially return the inventory to the platform, they're not allowed to fund any future inventory consignments through Kickfurther. So essentially, what the best, like smartest folks, right, are people that have some kind of visibility or knowledge, or, are bringing something to the table where they're able to kind of like identify great brands to work with, or great inventory that is well priced and is going to sell and the market's hot. To be honest, I'm not in the minds of these funders, so I can't tell you exactly what goes into their decisions, but there are some folks that have significantly outsized profitability.
What kind of access to the brand owner's information do they get in order to make a decision to fund that particular investment?
So there's a comment section where you can ask any of the businesses, questions when they launch. And usually, our funding period is usually around like a week or so. So there's time. Usually there's time for you to get some comments back. But we're also happy to facilitate introductions, right? We know for certain funders that want that have certain questions that might not want to be publicly shared on a comment board, right? We've made introductions to the entrepreneurs so that they can ask their questions directly. For a period in 2018, we were doing webinars for every single co-op, but we stopped doing that because it was kind of a bear to facilitate that all,
Yeah, given the volume that you've done, man, I would think that would be nearly impossible. What have you funded? About 1,000 purchases, or I don't know what you call them. You've done about 1,000 investments, or you've facilitated them. Yeah, is it 1,000 at this point?
Man, I mean, we're probably close to 2,000 at this point. Like I said, we had an 80% growth year in 2022, so things really started ripping.
How's I mean, I know we're only a few weeks into 2023, but what's your outlook for 2023 given the economic conditions and things of that nature?
So what's super interesting with the economic conditions is they really affect everybody else more than they affect us, right? So if you think like a lender that's like borrowing from a bank, right, in order to like lend against a portfolio, as the interest rates go up and as the bank charges them more, like there's probably a business that used to be profitable for them to lend when they could borrow at 2%. Now they have to borrow at 6%. And that business isn't profitable anymore, right? So something as the pricing of like interest costs come up, right? Like the risk aperture narrows for our competitors, right? Because they have to adjust for that risk and that additional cost somewhere. And so we see in this market, and this also happened in 2022, right after the pandemic, that there's just a pullback, right? You see like Wayflyers laying off people, Clercq laying off people, just broadly across the market. What you see is a reduction in support for product entrepreneurs as you head into, let's say, choppy market conditions, right? Mm-hmm. And what's interesting for us is we don't operate in that way. So we are not borrowing debt, right? The fact that interest rates have gone up, yes, there's some theory that like there's like the next best alternative has improved, right? For our funders, where before you put your money into a bank account, it earns 0%. Now you put your money into a bank account, it earns what, like 1.85% or 2% or something, right? So it's a little bit better, but it's still way worse than inflation, right? And so it's like, if you have cash sitting in a bank account, you definitely don't want it to sit in that bank account for 2023, right? Because it's going to be worth less by the end of this year than it's worth today. And the funny thing about inflation, what does inflation mean? It means the value of goods is going up over time, right? Like the socks you buy today are going to cost more tomorrow, right? That's the theory of an inflationary environment. And so giving people the opportunity to turn their cash into physical goods, which are then placed on consignment with growing product businesses, that's like winning market conditions as far as I can see for the Kickfurther marketplace.
Yeah, I think it is for sure. So from the brand owner's perspective, talk to me about the benefits of the Kickfurther model versus other growth capital models that are out there, and people that some might call your competitors.
Yeah. So I would say definitely there's others that solve the same problem we're solving, just with a very different solution, right? So pretty much everyone else out there is doing some type of lending or loan, right? Which means that every single time you take on one of these like debts, merchant cash advances, small business loans, whatever it is, it's this like equity erosion event, right, on your balance sheet. So you get $1,000 of cash, you have to pay back $1,200 as a liability, right? You just eroded $200 of owner's equity up until the point that you turn that cash into profit, right? Like buy inventory, turn it back into profit, and then you build your equity up on the balance sheet again. So it's bad for a couple of reasons. One, for physical product businesses, it's just like cash flow is king, right? So our solution is the only one in market that I'm aware of where you can have your next production of inventory funded without paying an additional dollar, right? Like $0 cash out of pocket, you get that next lot of inventory in your warehouse so that you can start selling it. That's extremely powerful. And even like good loan to value ratios are maybe like north of 50%, but there's nobody that's funding 100% cost of goods the way that Kickfurther is, right? As far as I know.
Yeah, just the consignment aspect of it is so attractive from a cash flow perspective for brand owners when they want to grow. Yeah, because they're not committed. I talked to somebody recently that made an investment, bought a company that with a 10-year loan and a fixed payment, and things have taken a downturn, and making the payments on that investment is a bit of a challenge for them. What happens if I, as a brand owner, and selling a consignment, and it just takes me 7 months to sell through instead of 4? Nothing, or it's just costing me a little bit more because I'm holding that note longer, or doing that consignment longer. Is that the case?
Well, so there are additional fees, and what we ask our businesses to do, like if we have to provide servicing on a co-op for 7 months instead of 4, that increases our cost. So there are some additional fees for processing a co-op that goes beyond the expected selling period. But in most cases, we're very happy to, like, my goal is not to run a fee-based company, right? So those fees exist to really try and incentivize people to stay within their expected selling timeline, right? But what we normally do is we'll say, listen, if you true up your payments to your users, right? They had their assets placed with you for 7 months instead of for 4 months, right? If you true up the users, Kickfurther is willing in 99% of cases to waive almost all of the other fees, right? So our concern is mostly in maintaining that healthy ecosystem to make sure that the marketplace stays healthy. Now, if you return inventory and you're like, I give up, right? I have no idea how I'm going to sell this. We don't allow future participations on the marketplace.
So what happens in that situation? So that I give up, I've got $3,000 worth of inventory, $30,000 worth of inventory. Do you sell it off? Do you abandon it? Do you write it off? What happens? The investors or the funding partners shrug their shoulders and write it off, or what happens?
So they get the cool thing is that they get to decide, right? So the first thing we do is we get the inventory back and we count it as Kickfurther. So how much inventory actually exists, right? Did they return 30 grand? Whatever inventory that's not returned to Kickfurther in sellable, deliverable condition is due as if it was sold, right? So if it's destroyed in a fire, if, they sent it out as a free sample to a buyer, they gave it away as a Christmas gift, right? Whatever circumstance, right? If we don't get the inventory back, it triggers the underlying consignment. Now, let's say we do get the inventory back, we count it, it's sellable condition. We go out to the buyers and we say to them, hey, you just purchased, you own like 50 t-shirts and we've got them here, right? So if you want, and buyers have done this, they'll take delivery of the inventory that they funded, and all they have to do is pay shipping, and they get the inventory at a cost of goods, right? The manufacturer's price, which, if you're buying a few $100 and you've got Christmas or holidays or something coming up, like not a terrible outcome. For the people that are buying more inventory, I haven't seen anyone take delivery of multiple pallets in one of these situations. So those guys more typically are taking a liquidation option, where we put it through a liquidation channel. And that's where they're taking a real haircut on the original cost of goods.
Yeah, understood. Okay, so what's it take from a brand owner's perspective to qualify for funding through Kickfurther?
We're typically looking for businesses that are, I think the minimum we have today is $400,000 of trailing 12 months of revenue. So it's around there. We are looking for businesses that have a bit of a track record. So around $400,000 of revenue, preferably digitally native. So the more access we can get to data through, like digital banking or things like that, the easier and smoother the process will be. And physical goods. So we have to work with physical goods. That's the way consignment works. We currently are doing pretty much everything with the exception of regulated products. So think anything that requires a license to sell alcohol, tobacco, firearms, and frozen and refrigerated products, right? Again, like the downside scenarios in liquidation, it's super expensive to ship and store frozen stuff in comparison to other goods. And then the last category is perishables, right? Like we're not currently working with stuff that goes bad in a couple of weeks because, again, it's just not as strong of a fit for our consignment model.
What about geographic limitations? Are you lending to anyone anywhere in the world? And I know you're not lending. I've still got to get my terminology right. Are you working with people that are, if they're in, Tbilisi, Georgia, or Portland, Oregon, as long as they've got a business that's successful with a track record, you're comfortable with it?
So currently geographically in the US, right? So we absolutely have global aspirations for the marketplace. As far as we can see, there's no reason we can't scale it anywhere. But currently we operate in the US, but we can fund manufacturing that happens anywhere in the world. So if your factories in India, China, Haiti, Europe, whatever, we've worked with factories all over the world.
What's wrong with our, friends up north, the Canadians? Come on, they're good people. Why can't my cousins up there use Kickfurther?
Canada and Mexico, because of NAFTA, are probably like the first countries we'll expand to. And, no slight to any Canadians, but I think like Canada's population is roughly the size of New Jersey. So it's like,
it's not that big of an expansion for you.
Yeah, exactly. It's like a lot more work than the size of market that it adds. So we'll get there. They're definitely our friendly neighbors, but probably a 2024 kind of thing.
You're just focused on, 80% growth in the last 12 months and making sure that your gross profit is, higher than that and running the business right to take care of your people that you're able to service, I assume then.
Yeah, I mean, like when you look at it, we funded $58 million of inventory last year in America. Like, what is that? A 1/100th of 1% of the inventory that gets like bought and sold in America in a year, So it's like, we're not even a grain of sand on the beach that is the American market today. So we just have so far to go with what we're doing today in this one unified, market of America that we're very focused on that. And then international expansion, once we can copy and paste the model, it'll just be copy and paste into all the other countries.
A grain of sand, great analogy. Look, Sean, you look like a young guy. You're full of energy. How did you come up with this concept and how far do you plan to take it? How big do you think Kickfurther can be?
So I came up with this concept. So I'm an entrepreneur at heart. I was running my own product business 8-9 years ago before I started Kickfurther. And I pretty much just slammed my face into this inventory funding wall, like enough that I was like, wow, this seems terrible. And there's no good solutions. It was pretty much killing my business. And so I essentially created the inventory funding solution that I wish had existed when I was growing my own product business. And we're just expanding it from there. In terms of, how far do I see this going? I mean, I think I think we've got a better solution for product entrepreneurs than anyone else. And typically marketplaces that win really, really big, right? And so it's like, if you were to ask me, what do I see Kickfurther doing we just did our vision meeting. So in 10 years, I hope that we're doing about $10 billion of inventory funded through the platform on any given year. I'd like to take this global. I'd like to take it to the public markets. Eventually, I'd like to go public, so those are my aspirations as CEO. I think even if you think about $10 billion of inventory through our marketplace a year, that sounds like a lot from 58 million. It is a lot. It's still like 1/3%, right, of global commerce. It's insane how big the world is that we're growing into, right? And so there's just so much for us to do to make an impact, to really affect entrepreneurs all over the world. And for me, it's awesome. We have 300 businesses on the platform today that we're helping, right? Somewhere around there. The more, the merrier, right? And for me, it's like, it keeps me going every single time you talk to an entrepreneur and they're like, I wish that this had existed. Like, I wish I found you guys 5 years ago, so I could have been using you since I started, right? That's worth all of the other stuff that goes along with entrepreneurship,
Yeah, it's a funny thing. You're helping people, and by doing a great job helping people, your business is growing well. So you're helping yourself and your investors as well. And I do assume you have investors. Is that correct? You went out and raised money to launch this?
Yeah, we did. I didn't come from a VC background, but I got super lucky. So we connected with some really great folks, including John Donovan invested early. He's been an advisor. He was the COO of Lending Club up until the point that they IPO'd. We have Bill Ty invested in 2016. He seeded Canva, Wish, was a co-founder of Treasure Data, seeded Zoom, rang the bell on the Zoom IPO. Tim Draper invested in 2017. And most recently, Tom Golisano, who founded Paychex, invested in January of 2021. So we're very fortunate to be supported by really an all-star board and a really great group of interested investors.
It's impressive what you've done. It's impressive the number of people that you're serving, and the folks that believe in you and have invested in you as well. So kudos, congratulations. Pretty damn impressive. Look, I don't want to be an ageist here, Sean, but you're so much younger than me. I was just screwing around at your age, right? I'm looking at your LinkedIn profile. I can't even tell exactly when you graduated college, but I know that I was just goofing around until I was about 29 years old. I don't think I had my first real job that lasted more than 6 months till I was 29. So really, really impressive with what you've done. Congratulations. I know you're quite a bit older than that, but very, very impressive. Congratulations on your success.
Well, that's the trick. I didn't graduate college, so that's why you can't find that info. But
look at that. Yes, I see Rutgers University down here, but you were
spent some time there.
It says, yeah.
Spent some time there, but yeah, no. We started Kickfurther when I was 27, and here I am, 36. It seems crazy. A lot of time has transpired, but it's been awesome. I definitely am very different from who I was when I started the business, right? And I think that's kind of as long as you're comfortable that things are just always going to be different, they're going to keep changing, right? And you stay on top of it. That's the trick with entrepreneurship, I think.
Do you see yourself being the CEO that can take it to 100 million in revenue?
100 million. So my goal is to kind of Bezos this, right? There's not a lot of people that do it, but it's take it to IPO, make sure it's on super solid footing, right? Maybe run it as public company CEO for about 10 years and then find a successor, right? So that's kind of what I'd like to do. And I hope I can do it.
Big dreams. I wouldn't be surprised if you pull it off. Congratulations.
Thanks, Joe.
How do folks learn more about Kickfurther? How do they check it out as a funder and as a brand owner that needs some money for inventory?
Yeah, we're pretty active on social now, so please feel free to reach out. That'll definitely find the right person if you contact us on any of our social media. And if you're ready to dive in, www.kickfurther.com, and you should be able to find what you need there. Knock on wood, it's all working.
Awesome. Well, thanks for coming on again, Sean. Good to see you.
Awesome. Thanks very much, Joe.